Good afternoon, Tsupiteros, and welcome to another edition of Pillow Talks. Before I begin, I'd like to thank one of my sponsors, APS Online. If you'd like to trade with a broker that has excellent research, do trade with APS Online. Okay, so as always, let's analyze the market first. Let me show you the chart of the index here. So you can see, after the market has slowly dropped in the last few days, we started to accelerate downwards last Wednesday, and then we further accelerated downwards last Friday. And from the way I see it, we are now, the market is now starting to capitulate. The bulls are now starting to capitulate. All the stops in the short term have already been taken out. So I believe the market is now approaching oversold conditions and is about to probably find a short-term bottom probably as early as Monday or Tuesday. So expect prices to probably establish a short-term bottom somewhere around here at around maybe the 6.5 or 6,400 levels, and then maybe pop back up. But of course, we don't expect prices to climb anywhere near the previous highs of 7,400 anymore in the short term. If we use some Fibonacci retracements here, and maybe project it downwards. Let's try it here. Okay. Oh wait, my charting isn't working. Give me a moment here. There you go. So let's just say that we bottom out at around 6,400, for example. Okay, then we would probably expect prices to rally back up towards maybe the 38% Fibonacci retracement, which is around the 6,800 level. At the best case scenario, we'll probably climb back up towards the 50% retracement, which is around 6,900 plus. So it all depends first on where this market will bottom in the short term in order for us to get an idea on how much this market can rally once it does. Okay, so I think let's look at it from a bigger perspective now. And I've been hearing some people thinking that like the market can go back to the 4,000 level or something. From the way I see it, from the way the technicals of the market is looking right now, it would take quite an effort for the bears for that to happen. No, there are a lot of support levels for this market to break before we even think that the market is going to go to 4,000. So at the moment, I drew this two parallel lines for the medium-term chart of the market, and you can see that we have a major support here at about the 6,200 to 6,300 levels. I do not expect those levels to get broken in the short term. So although we might be weak in the short term, I think the downside of this market may be capped towards the 6,200 level at most, and maybe at worst we will just consolidate or move sideways in the short term. So I expect this market to behave something like this. Okay, so it might move downwards in the short term. Okay, create a bottom, move, do a counter rally, possibly a 38% retracement, and then may possibly retest the lows and maybe even break below it. So you might want to take advantage of the short-term rally that will happen in the next few days in order to lighten up your positions in the market, and maybe just stay liquid and stay in the sidelines after that. I expect February, March, and possibly up to April, the market will continue to be weak. But again, I'm still bullish for the end of the year. I think the market is heading higher towards the end of the year, but maybe in this first quarter should be an opportunity for those who want to position to the market to be able to get in at low prices. So if you're a Tsupitero, you're pretty bearish right now. But if you're a position trader, you ought to be looking to buy into this weakness of the market. Okay, so that's how I see the market now in the short term and in the medium term. Again, I don't expect this market to plunge any lower than 6,200 in the short term. And again, this might be the last chance for position traders to enter this market before the market roars back up in the third and the fourth quarter, I believe. So that's my take on the market. And before I continue with this video, I'd like to thank another one of my sponsors, AAA Equities. If you'd like to trade with a broker that has automated stops and automated breakout orders, do trade with AAA Equities. Okay, in the second part of my video, I'd like to continue with my analysis of the third line sector, and particularly the more popular or more active third line issues, which are basic, AR, ABA, MRC, and PHA. Okay, so let's look at them one by one. Actually, they have very, very similar pictures. Here I have, I'm showing you now the chart of basic right now, and you can see that after this big drop here, it did a rally in the last Wednesday, and then tried to continue higher last Thursday, but it appears to have formed a short-term peak at 132. Okay, so if you look at the charts of PHA, they look very, very similar. This is PHA. You have MRC. You have ABA. Okay, and Abra. They look very similar. No? They all rallied that last Thursday. They failed to follow through last Thursday, and some of them are even looking like they might still continue to trend down. Okay, so again, let's look at, this is Abra. So if you look at the chart of Abra right now, there is actually a possibility that prices can continue to trend down and possibly head towards this level here before it climbs back up. Okay, so it's looking for those that are weaker compared to the others, like such as Abra or ABA also is looking similar, wherein prices could probably go towards this level here before it maybe rallies back up there. Okay. PHA is also looking very similar, wherein it could probably go to this level here before it climbs back like this. Okay. And MRC2 is looking quite similar, wherein it could make a lower low here before it rallies back up there. Okay. The one that's looking quite different and is probably the strongest among these five issues is basic. Okay, because it had a relatively big rally from 69 cents all the way to 132. There's a possibility that it could actually form a higher low, wherein although prices might drop here, it may respect already the previous low of 69 cents and then maybe climb back up going this way. Okay? So aside from basic, I am leaning towards a lower low for all those other speculative issues. Okay, so I have drawn like two scenarios here in my okay, so here's the first scenario that I can see. So we are actually here. We're here right now. Okay. Okay, we are here right now. And so I expect maybe prices to make a one last final lower low before prices rally relatively stronger than the other rallies that we've seen so far in these issues. Okay, and then possibly if the rally is strong enough on the next rally from its lower low, then it could possibly make a higher low and maybe do a what we call in Elliott wave a wave C, a zigzag or a wave ABC pattern. Okay, so this is the first scenario that I can see for these issues. The second scenario that is possible to happen could be something like this. So it's very similar to the first scenario that I showed you, except that the lower low on this area here is no longer as weak or as deep as the first lower low that I showed you. So it's more of like a double bottom type of pattern. If this happens, then this would be a stronger pattern. On the next rally of this market here, prices could probably already form a higher high, and then if it does form a higher high, then it will most likely form a higher low, and again it will probably create a zigzag pattern wherein it can do an ABC wave here again on the right side of the chart. Okay, so so if the downtrend is going to continue for these issues, so I've summarized all of this, in this table here in my Excel. So if the downtrend continues for these issues in the next couple of days, APL can head towards 0.115. So I forgot to mention APL here. Let's look at the chart of APL. Okay, so among all these 5 issues, APL is actually the one that's looking the weakest among this group. For this stock, I expect it to form also a lower low and possibly head towards this level here, maybe close to 10 centavos, and then maybe rally and maybe rally towards back towards the 20 cents level once again. Okay, so for this particular drop of these issues, I expect APL to go towards the 0.115 level, PHA to go towards 140, MRC to go to 32 cents, basic to go to 50 cents, AR to go to 0.0032. Okay, but let's just say that I was underestimating the bulls on these issues, and these issues already respect the lows last January 27 or last Wednesday. So if that happens, then I would expect prices to rally back up and maybe head towards their 38% Fibonacci retracements, which is for APL that will be 28 cents. For PHA, that will be 2.25 cents. For MRC, that will be 0.62. For basic, that would be 132. And for Abra, that would be 0.0075. So what do I mean by that? So for APL, that will be 28 cents. So let's just say that this low is respected. Now that low of 0.169 is respected in the next maybe 2 days. If it does, then I would expect APL to climb back up towards its 38% Fibonacci retracement, which is this line here, or around the 28 cents to 29 cents level. Okay, so that's what I meant by this 38% retracement here. Okay, let's look at PHA. If PHA is able to hold above this low here, its low last Wednesday, then it too can rally towards its 38% Fibonacci retracement, which is actually just its previous high last Thursday at 225. Okay, for MRC, you have 62 cents. Okay, so here we go. The 38% Fibonacci retracement is at the 62 cents level. Okay, for basic, it's 132. Okay, so here we go. 132 is actually beyond its 38% retracement, and it's actually in between the 38 and 50% retracement. Given that basic is the strongest one of all, and if it can actually hold already above the 90 cents level, on the next rally back up, it can even surpass its previous high of 132. But let's see. For now, I still expect all these issues to form lower lows. I expect basic to possibly retest its previous low near 69 cents. Then if that happens, then these targets for these 38.2% Fibonacci retracements will all probably move downwards. So again, the theme here is the higher that prices are able to form lows, the higher that prices can rally the next time that it rallies. The lower that prices drop and form lower lows, the shallower the succeeding rallies will be. Okay, so that's it. Again, I hope you learned something from me this weekend, and good luck in the markets. See you again next week. Bye.